On this episode, we're joined by Jon Hall, who is the Group Managing Director of Mortgages at OSB Group. So today we're going to get his views on the current and future state of digital innovation within the mortgage market and discuss his plans for the lending brands within OSB Group. So Jon, firstly, thank you for joining us today. For those that aren't familiar with OSB Group, can you give us a bit of background about the company?
Hi Mark, thank you very much for inviting me in here. So OSB Group is obviously a FTSE 250 listed business. It's a specialist bank. I like to refer to it as the specialist bank in the UK, although I think there's a number of others in our space that operate in that way. So, Aldermore, Shawbrook, to name but two, Paragon. So there's three particular lending brands that I'm responsible for. So I joined November 2021, so only just gone more than 6 months as the Group Managing Director of Mortgages. And so the lending brands that I'm responsible for, obviously Precise Mortgages, Kent Reliance for intermediaries, and Interbay. And then also within the group we've got two other lending businesses, Interbay Asset Finance and Heritable Development Finance as well. So a pretty broad ranging lending business. And our loan book is about 21 billion as at the end of the Q1 results that we announced. So we're just in the process of completing our Q2 results as a listed business as well. So lots to get my teeth into in a relatively short space of time.
Sounds good. And before we dive into talking about those brands in a bit more detail, can you talk a bit about your personal background?
Personal background, yeah, okay. My background, I guess, is fairly unusual in terms of the kind of the mortgages product manufacture and distribution space. My background goes back to PwC originally, so trained PwC. Spent a number of years with them, including a couple of years over in Bermuda. So lived abroad for a couple of years. Okay. We come back to that one, and then I kind of left PwC, joined Aviva. So hence some experience with a FTSE listed business. I was with Aviva for a number of years, and then got more involved in specialist lending just over 20 years ago with a business called Central Trust, which was a mortgage broker and mortgage lender. And following there, I went to Saffron Building Society initially as a CFO, hence my kind of financial background, and more latterly there for 3 years as the CEO of Saffron Building Society. Back in 2014, I left to join a firm called Marsthaven, which at the time was a relatively small bridging lender, and took the business through its banking license application authorization and took to market. So I was with Marsthaven for 6 to 7 years as managing director, and luckily as the chief commercial officer and deputy CEO. And then after that, joined a firm called Aspinall for about 8 months, which was another kind of startup bank. And was then obviously got involved in the process to join OSB Group, and for me it was a culmination of all those years in specialist lendings to have that kind of opportunity to join what I believe is kind of one of the best businesses in the market in terms of lending, in terms of distribution through intermediaries. Fantastic team, high achieving business, always goes about things in the right way. So for me, it was like a culmination of kind of, hesitate to call it kind of dreams and ambitions, but for me it's the dream job. I love being involved in lending in the UK. It doesn't matter what sort of challenges there are. I think there's great opportunities as well, and this for me was a fantastic role to join a very successful team and a fantastic business, as I say, just over 6 months ago.
Brilliant. So you joined in November. What's been your sort of main focus since you joined?
Well, it just feels like my feet haven't really kind of stopped hitting the ground and running. I think having three lending businesses, I think it's been a kind of fantastic opportunity to get all of those three lending businesses working together. I think that clearly was a priority. I think OSB Group is obviously the coming together of what was Charter Savings and what was One Savings Bank. So actually. That integration was done, very productively in the kind of previous 12 to 18 months before I joined. So really, I've had the fantastic opportunity to kind of what I would frame as get lending going on all cylinders, which means a number of things really. I've expressed it to the teams internally in terms of first thing is obviously communicating at our best. We've got those lending brands. It's about how we present that the reason each of those lending brands exists to market, and making sure that's clear as to how they all fit together. Secondly, it's about excellence and experience, so making sure that the front end and the origination side of the lending business is as integrated as possible with the operational side. So working very closely with the underwriting teams to make sure that's all joined up in terms of making sure it's an experience that kind of stands out end to end, and that everything works together. So and also doing quite a bit of preparatory work, which we may well come on to in terms of what does good engagement look like for intermediaries? What's going to kind of create a service proposition that's going to stand out? So that excellence and experience is really important. And clearly, the other one is to make sure that the distribution, the sales team that we have, is organised to kind of develop in the way that our intermediaries are developing, and make sure that we have a kind of face off with our intermediary partners to make sure that we're kind of operating there. So that kind of leading kind of sales experience has been particularly critical. And then fundamentally about lending, clearly. Again, it's all about communicating, but also making sure that the products that we develop in both the kind of the buy-to-let market, the residential market, the commercial market, semi-commercial, bridging, they all kind of operate in the way that the market needs them. And I've been looking to establish a rhythm of change probably 2 or 3 times a month in terms of making sure that there's a regular supply of new service and product offerings to the market, which my team have responded really well to, and all of that. So when you go through those are what I kind of go with as being like the 4 pillars, which I'll probably get quite boring about in terms of repeating, because I tend to forget things, so I'll make sure I repeat the same things. But those feel like the fundamentals of any good lending business. It's making sure that all of those things work together. So that's really where it's been most focused. So you will have seen things like we relaunched our commercial proposition into Interbay in the beginning of January. We've then obviously gone through a number of refreshes, the buy-to-let ranges most recently. We launched a new Kent Reliance residential range in February. A new Precise is now back into the into the bridging market as well. And we've launched Interbay into kind of more heavy refurb bridging as well. So pretty much across all of those different businesses over the last 6 months has been kind of a lot of activity, and that's obviously also having to respond to a number of interest rate rises and product shifts within the market, which has been really, really interesting to deal with. And as businesses, I don't think many businesses have had to kind of respond to significant raising of interest rates most recently. So getting into that rhythm of being able to kind of respond to that in an organised and a controllable way has been really one of the achievements I'm quite pretty pleased with the way that our business has responded as best we can. I mean, there's obviously as long as you keep an open communication to intermediaries as to where service is at the moment. Expectation management is really important for intermediaries to know what they need to be doing and managing their own clients. And as much as possible, we've tried to kind of just keep on the front foot in terms of some of the communication we've been issuing out there, because communication is key, really.
It's been an incredibly busy time for the market generally, hasn't it? It's been a bit of a sort of unprecedented in many ways. So if we think about, you mentioned the kind of 3 really well-established lending brands within the group. Would you be able to talk a bit about your sort of digital plans for Kent Reliance for intermediaries, Precise Mortgages, and Interbay? Yeah, I mean, I think we've worked together before, Mark, haven't we, on digitisation in terms of what we've done, and I think. It's interesting the way that the kind of the mortgage market is developing. I think it's coming a long way in the last kind of 18 months relative to what it was before, but it's got a long way to travel. And actually, I think where it's being driven from to a degree is actually coming from the intermediaries. I think we're seeing, in various conversations, whether it's with L&G or MAB or others, those organisations are putting a lot of effort into making sure that the digital offering to their advisors is as powerful as possible. They're providing a lot more kind of tool sets, access to information, and kind of joined up kind of sourcing and selection of products a lot closer to the intermediary. And I think that's where quite a lot of the drive of digital energy is. And
and from a lender's perspective, I think it's important for us to try and kind of maintain our kind of momentum as those intermediaries are driving that kind of market at the moment. And so that's where I've spent quite a bit of time over the last kind of handful of months, just understanding where the intermediaries see that their proposition is going, because at the end of the day, that's kind of where we've got to make sure that there's not a kind of drop off in experience that borrowers and advisors have when they go through intermediary sourcing and then come to the lender. That's where the challenge is, and I think there is a big challenge for the mortgage market. I think it hasn't really progressed as much as other kind of financial services arenas. So whether you're thinking about unsecured lending and personal loans, whether you're thinking about current accounts, whether you're thinking about insurance, and the sourcing and kind of access to insurance products as well, I think mortgages is kind of lagging behind. And I think it's very much up to the kind of the suppliers of product and kind of the customer relationship to kind of step that up. So for me, digitization, use of data and analytics in the mortgage market has got a long way to go, but I think it's on the right journey. And I think what we've got to do is to make sure we do things like, as much as possible, provide personalization of product at the front end to kind of the advisor and the borrower. We've got to try and improve our self-service capabilities, particularly on areas such as retention, so product maturity or change of details. I think those are simple areas that we've got to improve on. And the third element is about communication. I think that as I said, communication is for me one of the most critical kind of factors in any kind of partnership relationship. Business dealings, it's really important. And I think sometimes the way in which technology is used in the mortgage market, it doesn't really help that communication process to the advisor and to the customer to know what's the current status. It's people aren't really asking for much more than just, can you just keep me informed? And sometimes when things get busy, actually that's the first thing that gets dropped, is that communication. And really what we've got to try and find a way of doing is using technology, using data, using kind of digital techniques to actually make that communication process as repeatable and as consistent, and actually step up the communication when things get busy, because naturally it goes the other way around. We tend to forget about it, or we put it to the back of the queue. So I think there's a number of ways that kind of digital can start to develop. And I do take quite a lot of inspiration, I guess, from other kind of businesses that I think do use digital very well, and other experiences that I think use digital really well. It's really up to us in the mortgage market, I think, to try and almost catch up in the first instance.
Yes. And it's funny, when we do research, we speak to brokers, a lot of what they're asking isn't, technologically that advanced necessarily. It is much more around communication and access to status updates around cases and things like that. Some of the basics around passing of data electronically that other sectors, particularly we do a lot of stuff with the insurance world, is probably come out to a decade ahead in terms of the kind of general capabilities in the market. Yeah, well, messaging, we all use messaging, don't we, in WhatsApp, in kind of text messages and whatever. So I think, if you look at insurance, there's a business in the States called Lemonade. I'm sure you've looked at them as well. And actually all of their communication with, typically it's direct to consumer, but all their communication is done through messaging and using kind of, smart kind of analysis and kind of next steps to use that messaging to kind of maintain a communication. I think people are very clever, people are very smart, that say, I can tell when it's not real, I can tell when I'm not actually making progress. So getting the right balance between communicating something which is useful and something which is, actually, I'm wasting my time here. Time is a precious commodity, and if you're communicating in a way that kind of just isn't really adding any value to that kind of engagement, then I think it can very quickly turn people off the other way. So you've got to be very thoughtful about the way in which you engage in that two-way communication process, and actually do something with the information that comes back to you, which is the other part of the challenge, that we tend to be quite good at pushing information back out, but sometimes actually receiving information back in, communications back in, and actually acting upon it in a joined up way, I think is the challenge. And I think that's where
in a specialist lending business, it's really important that we get the right balance between actually kind of digitize and automate some of the more kind of standard communication processes, and actually make sure that when we're receiving communication back, that's when the value of people really comes in, because that's where you get a lot more in kind of interpretive responses and intelligent action. So I think that's, particularly in specialist lending, I think that's really important. So then use the kind of information you're receiving back in a thoughtful way, and that's where we want to try and put, I think, as a market, we then need to start thinking about how we use the kind of raft of very talented individuals that a number of specialist lenders have got across their business to do things that actually people kind of are best positioned to do. Getting that balance right, I think, is quite difficult.
Yes. I guess if you think about the brands within the group, particularly Kent Reliance for intermediaries and Precise for Interpay as well, people come to you because they want that human decision ultimately. It's a key component. But the converse of that is you don't want sort of the humans in the business necessarily doing manual repetitive tasks they don't need to do. So it's that balance, isn't it, between sort of automating and freeing them up effectively.
Yeah, I mean, it's clear that Precise has the more kind of technologically led kind of scorecard data-led decisioning. And slicker. Obviously, Kent is, we kind of use this handcrafted kind of description of what we do. It's much more kind of flexible. We've got a very, very flexible lending policy, and a very kind of experienced set of underwriters behind that as well, that can kind of help navigate that policy. And obviously, Interpay in commercial lending itself, semi-commercial, very complicated. You've got larger portfolio landlords, much more kind of thinking about significant numbers of properties, and have structuring challenges that they want to push through as well. So that needs a very experienced underwriter to kind of help navigate that process. But that doesn't mean that there's not degrees of, as you know, there's not degrees of kind of use of technology and digital that can kind of help navigate that. And make sure that those specialist underwriters are used in the right place.
Now, if you mentioned earlier the Master Haven Broker Portal project, which we had the opportunity to work together a few years ago on, and I think it'd be fair to say that really pushed the boundaries really in terms of bridging and development finance of what was possible through automation for certain cases, and even where a case couldn't be necessarily automated and auto did, really making it a digital journey, the application process, and using all the kind of assistive technologies around that. Do you think that the bridging and commercial world will ever really catch up from an experience point of view to the broader mortgage market from a sort of digital perspective?
I think it's a really interesting one, actually. I think in some ways some of the requirements of those specialist markets could actually lead the wider mortgage market itself. So I think you've definitely got the thought that we put behind Master Haven's short-term lending portal was really just to make sure that actually, if you needed a simple decision up front, which had limited engagement, then allow an intermediary to kind of self-serve that point. So actually it became kind of, you had a layering approach there that said, look, we're going to allow you to personalize what service you get here. If you want a quick quote, we'll give you the facility to be able to do that. Actually, if you want, within certain parameters, you could also get an automated decision back, which was unusual in the bridging market, because everything typically was being kind of had to be touched by somebody. And so there was a degree of skepticism at the start that said, where somebody said, this is an auto accept, really, in bridging, is that really what's going to happen? And yeah, I mean, there's certain parameters that works. And then when you want a credit back decision, well, that's the service that you want. Sometimes it takes a bit longer to kind of get that kind of human intervention on something, but you get to select that as an intermediary, and you can make that clear to your client that says, actually, well, this is the service that we're now going for and why we're doing it. And actually, what it did was it meant that the resources that we had were able to be kind of focused on the bits that the intermediary was choosing that service, and that was really important. But up front, the intermediary was able to give immediate terms, immediate kind of credit, credit back terms to borrowers, just indicative. So this is the type of thing. And what you're doing is you're starting to build up, the advisor starting to get commitment from their borrower, using that information, and that commitment builds up all the time to the point where actually you're starting to engage. They're engaging real time, you're engaging real time in what the proposition is going to look like. These things change so much. And I think that kind of layering and self-selection is something that I think the wider specialist lending market can actually start to leverage from as well. And it's just as applicable within commercial lending and other specialist lending types as well. There will always be a cookie cutter type, mainstream bank doing this is the way it fits, and it goes straight through. It doesn't touch the sides. It doesn't need to touch anything else, and there's no complexity to it. And that that route will always be built. But actually, those systems are typically, they start to fall apart. We all know when we're dealing with airlines at the moment or anything else, when things kind of move slightly outside of that kind of narrow, this goes straight through, things start to get complicated, and that's where I think specialist lending and specialist markets have a particular powerful response in that we can help navigate that. So let's not draw our kind of lines too thinly, because I think that will kind of lose the markets that we're in. Let's make sure that we actually kind of are able to adapt our services to the way in which advisors want to help their customers, and actually make sure we can put proper intelligent interaction at the right stage of a process. And I think that's what we did with the short-term lending portal. It was part of a wider intermediary kind of website piece where we integrated it with Knowledge, with Knowledge Bank as well, which was important because again we want to provide services for research, calculators and tools for advisors as well. So we want to have a place where you can come and actually help you on that journey, and that's what we did in the wider sense with the portal as well. So it kind of fitted into a wider specialist lending intermediary site as well that we put together. So and it seemed to work, as you say, it seemed to work well. And directionally, since we did that, there's been a lot more technology flow into bridging over the last kind of 18 months, 2 years or so. Certainly, those markets have kind of look to kind of move that move that digitization agenda forward more so than maybe even some of the other kind of lending markets that we're in that are bigger. But I think there's obviously good learning that you could have from different lending types.
Yes, I guess there has also, I think, seen a bit of broadening of capabilities in some certain mortgage brokers as well, as the kind of the world's got more complex, branching out into specialists as well. So you're starting to see within certain mortgage brokers, brokers with actually lots of different lenders, and I think the expectation of experience is starting to increase now. It's a bit far behind other industries, but there are certain lenders offering you sort of much better experiences for brokers. Yeah,
I mean it's a really difficult one, isn't it? Because the advisor at the end of the day is really wanting to get multiple kind of decisions fed back to the central place where the advisor's doing the research. And actually then be able to say, that's the one I want to go with, and then have that journey consistently applied all the way through to the end of the process to completion, and then ideally, if there's anything you want to do after your loan's completed, further advances or retention, maturity, product maturity, they want that consistency of experience, and that's the one that's I think the biggest challenge at the moment. A number of firms have done some fantastic integrations to a point of the process, and they bring all of that back, but it's actually the end to end that is the one that I think is kind of proving a slightly bigger challenge. And I think it reflects the fact that a mortgage isn't an unsecured loan. It's not a one-off, and a mortgage has there's a reason why. It's all linked obviously to your property, and there's people are using their properties in lots of different ways at the moment, and it fits to what they're trying to do with their lives, and yet the mortgage transaction is kind of structured from a technology perspective, really quite in a binary sense. You get to completion, you put it on, and you service it, and there's no sense that actually it all needs to be brought together as part of the kind of relationship that an advisor has with the borrower over a longer period of time, and you need to be able to fulfill, be there at that point. And I think there's just a disconnect in the way that kind of systems have been built with a view to how a market operates, and actually how borrowers and advisors really want a market to operate going forward. And we're just at that point, I think, at the moment where people are trying to work out how they bridge that, because I think they've been trying to, you do it two ways. One is you do it incrementally, but then it's a bit like, you can't eat the elephant in one go, or you can't leap the canyon in multiple steps. You've got to make a big change, I think, to the way in which you kind of respond to the way that consumer behaviour is changing, and I think we're just in that period where people are trying to work it out, and kind of work out, do you go from one big provider to a number of providers that you integrate together? I mean, you're a technologist, Mark. I'm not, so but it's how do you kind of provide that experience? And unfortunately, I think there tends to be two schools of thought. You either go for the big system solution from one provider that kind of tries to tick all those boxes, and that's quite difficult, or you try and integrate together the best of breed in a number of different ways, and make sure that solution kind of works for how people are trying to navigate. And I think in the mortgage market we haven't quite worked out what the right solution is yet. Yes. And make that happen.
And we're seeing a lot of sort of industry initiatives from third-party platforms with some great ideas, really trying to push things forward. However, that final leg of connectivity into lenders, they are big struggles that are not unique to, well, they're fairly common in many lenders around legacy platforms, a lack of just data communication that can be done electronically between internal systems. They've got monolithic legacy systems which pose their own challenges. But also, I guess we're still at a point where brokers, if the rate's good, has been good, they will still put up with a certain service to this point around, technology. And I do wonder, will it start to become more of a competitive advantage? Will it start to, the technology speed of turnaround, really start to become a bit more of a competitive advantage in reality for brokers that will sort of feed into decisions and where business is actually placed? Yeah,
I think certainly service is one of the aspects that, that will differentiate, and it's one of the key factors clearly that's there when a piece of advice is being delivered. I think that there's no one approach. You can't compete on price. You can't purely compete on service, but it's about joining the whole proposition together. And I think the other element that's increasingly the case in the mortgage market is actually it's that lifetime relationship that's so critical. It's a lifetime relationship between the borrower or an advisor and the ultimate and the advisor, but also the lender relationship is important. So it's not just about a one-off hit. You've got to make sure that the maturity and the reversion experience is good, that the further advanced experience is good, and that takes a whole, in a number of different ways, that takes a whole kind of reimagining of the way in which the communication and the kind of the technology experience is delivered, and that takes time to kind of work on that basis. So I think that as ever with these things, you've got to be competitive in a number of different spaces. One is that one clearly will be service, another one will be competitive around price, and make sure that there's consistency there. But I think it's about making sure that in the most rounded sense that you're able to kind of deliver on the promise that you're giving. And I think that's probably the biggest kind of issue with advisors is at the end of the day they're dealing with a customer. And they need to know that from a technology perspective or service perspective, from a product performance perspective, in a number of different ways, the product that they are advising and taking forward for their customer actually performs in every way in the way that that they've explained it and that they've kind of believed it would be happening with that particular lender, and that's why it's so important that there's so many good outcomes that need to be delivered. It's not just one dimension. You need to deliver against a multitude of dimensions that says the product and the service that you're delivering lives up to the promise that that the expectation, reasonable expectation that advisors and customers have as well. Yes. And you don't want to be in a position where the technology is a barrier to that, because then there's all sorts of negative connotations that come about in terms of the customer experience and their engagement, their satisfaction, their retention, and also just some of the other outcomes that you want to make sure that are good outcomes for the customer at the end of the day. The product performs in the way that it's supposed to, whether that's service, price, other features, criteria. It all needs to perform together, really. Yeah, it certainly does feel like momentum's building in the mortgage sector. I think so. Really... I really do think so. I think the mortgage sector itself over the last number of years has been through quite a kind of a transformation that hasn't necessarily manifested itself in a differentiated customer experience. Yes, obviously we've been through regulatory reviews and we've been through commercial reviews, and actually the mortgage market is very well functioning, but it hasn't kind of transitioned to being a sector you'd point to and go, look, that's a differentiated kind of proposition. Yeah. But I do think it's moving in that right direction. There is the adoption of open banking a lot more, of APIs that integrate, the use of kind of robotics, in terms of automating process, both in terms of the mainstream and in the specialist markets as well. And we use all of those techniques across our business at the moment, and we obviously want to be using them more. And I think it's moving in that direction. Yeah. And I do think, as I said, I think the intermediaries are driving that. I think they know what experience they're trying to do. They're trying to deliver to their borrowers. I think there's definitely a sense that that's happening. There's also that kind of the borrower behaviour is looking to drive a lot of that as well. So I think expectations of what was once good enough and would have stayed are kind of shifting quite exponentially. So it's something that I think we'll continue to see accelerate as well.
Yes. I'd be interested to get your thoughts, given your kind of broader financial services experience. We're a couple of years into the Fintech neobank journey. What are some of the lessons, as a kind of broad market, what are some of the lessons that you think we could learn from some of the successes and failures so far?
It's a very well framed question. I think that there is what we have seen is a number of different kind of practices, particularly from those businesses that are what I would call kind of platform businesses, current account providers, that show the advantage of a couple of things. One is some really quite straightforward, technology on kind of account opening, origination, etc. Yep. What we've seen is, some really good use of technology to kind of make origination and kind of communication with customers much more kind of progressive. I think that there has also been some clear kind of sort of gaps in some of how some of these things are applied, and really what it does sometimes is make sure that you've got to go to these things and make sure that risk is at the forefront of some of that experience. Risk management is really important, as well as a good customer experience, and getting the blend of those things together I think is really important. So whether you're a Monzo or a Starling or N26, where account opening is happening, you've actually got to make sure it's done in a controlled fashion, and risk is part of that equation, because it protects the customer as well as the organisation. So I think that took a bit of time to kind of understand, in terms of getting those things balanced. I think that appears to be there now. I think as much as anything, the kind of the Fintech kind of initiative, if you like, has really required everybody else to up their game. So I think I think there has been a definite progression by some of the larger banks, and particularly in current account provision, whereby they've actually stepped up their game, knowing that they've been challenged in a number of different places. And they're doing that in terms of kind of ability to communicate, tools and services that are offered through technology as well, and kind of improving some of the kind of particularly the app-based kind of current account banking, which is now pretty progressive from everybody. I don't think necessarily that there is anything differentiating in some of the fintech side of things that you can't get in kind of mainstream current account banking. Yeah. So the piece for me in terms of the opportunity in the future is actually to go, well, actually, where are those areas where you need specialist engagement, and how do you deliver that in complementary fashion with technology? And I think that's the bit where I haven't yet seen anything kind of material shift in kind of the use of technology in some of those specialist markets. And I think that's where there still is a lot of opportunity. But I think certainly in terms of shaking up incumbents to respond more progressively and more actively is certainly one of the biggest successes of kind of the fintech investment that's happened, as opposed to a material shift in kind of the kind of who you're choosing for being a particular provider, and that of itself is that's a very worthy outcome. It's not probably all that the fintechs are looking for, but I think certainly we've seen that shift and that kind of shake up that says that you've got to step up to this and communicate with your customers in a much more progressive way, and I think that's also happening as well. So, but I think we're at the early stages. I think we really are still at early stages in terms of how kind of technology may kind of reshape markets going forward. And insurance is a classic. I mean, it's much more kind of further developed, I think, than some of the lending markets in terms of how instantaneous decisions are reached, how personalised offers are made to that individual, personalised pricing and personalised product, and your ability to then kind of manage your product and manage that kind of that service experience you want, self-serve. I think is much more progressed in the insurance market and in other markets. I think lending markets have got a way to go.
Yes. There's a couple of things. I think firstly, from the customer expectation point of view, in the user research we do see borrowers talk about, if I can open a bank account using digital ID, why can't I provide that to my lender or conveyance, etc. So that's kind of feeding through as well. It's interesting, the insurance market, we've seen, because we do work with insurers as well, there has been in some sort of areas of insurance a bit of a race to the bottom and commoditization, particularly if you think about aggregator websites and people that buy a policy based on this aggregated, solution. They find out when they come to claim, well, actually, that was such a stripped down policy that I can't actually necessarily make a claim. So it's been interesting to see how that market's really kind of, I think, really sort of split into two, where the Lloyd's brokers and that kind of more specialist insurance has come, has really kind of carried on and grown even within that market. It's kind of split out in those two different ways. So I think that's probably the way we'll see the mortgage market.
And I think the thing that jumps out there is you've got to provide the tools and the services and the experience to people to do as much as possible themselves. With clearly, sometimes that could be through an advisor or it could be directly. And allow them to kind of flex and personalise and configure as much as possible on their side, and provide all those tools and services and that experience, and then you can make sure that the route they're able to follow through is consistent with that. But always, I've always kind of, we started with this concept of human and digital, and I still believe that it's how you blend those things together as much as possible, kind of make a difference, particularly in specialist markets.
Yes. So if we think, sort of keeping broad, thinking about the market, are there any sort of technologies or trends that particularly excite you at the moment?
I'm not a technologist, so again, I'll come back to it. I think just looking at a few things that are going on, I think are quite interesting. I think the best ones actually are where again communication is, and the sharing of information across a value chain. So if you're buying a house, if you're undertaking a survey, you're kind of arranging a mortgage, you've got to go through a legal process, valuation process. It's quite complicated, and it's in lots of people's hands. So I think anything that kind of that has everybody on the same page, because as soon as things get a bit complicated, other people have started to do it. You started to second guess where something's at. So I think there are technologies at the moment. I think using blockchain type transfer of information through different parts of a process, which means everybody sees the same view of something. I think that is going to be quite that could be quite transformational, because I think then human behaviour is that I'm not trying to second guess and try and understand it, and I'll put my own slant on it. That's the current status. Everybody sees the same thing, and actually you can then get a lot more kind of synergy out of that by saying, actually, I'll use that piece of that's relevant to the stage I'm looking at as well. So I think anything like I think blockchain is quite an interesting one, because I think it does allow kind of a 360 view of a piece of information for everybody, and everybody go, yeah, we're all on the same page. So I think that's a really interesting one. Other than that, I think the way in which sort of information and data can be exchanged, I think is quite exciting. For me, I think it's really important that actually a customer or an advisor is put in control of as much information as possible in terms of seeing what's going on with a particular kind of case or a particular account or their own whatever element of borrowing. And then is able to kind of configure with a provider what happens next. So that idea of collaboration and kind of self-configuring or configuring and personalizing. I think that's particularly particularly important. But at the moment, that particular journey is one that I think is a challenging one to get on.
Yeah.
So I think that that's the bit that you go. Look, there's some real opportunity to kind of make use technology and people together in a much more kind of joined up fashion. So I think there's things that are moving forward and are moving at a pace, and there's other things where you just go, actually, there's a fair bit of work still to do on that.
Yes. So you're not holding all your meetings internally in the metaverse yet, for example?
No.
Not quite yet.
Not
Give it time for that.
Yeah, give that a bit of time, yeah.
So actually, I think interesting you mentioned you were working in Bermuda. I've got to ask you before we sort of wrap up.
Yeah, this was a while ago.
Were you an early pioneer of home working from Bermuda?
No, I didn't.
Ago,
no. So I moved over there.
Oh, okay.
So, yeah, I moved over there. So I worked over there for a couple of years.
Interesting.
So, yeah,
what was your role over there?
Just worked for PwC over there for a couple of years. So just working in banking, so banking, hotel clients, a lot of insurance as well. So that was very much kind of a lifestyle choice to go away for a couple of years and use that. And it's obviously a hotbed of financial services as well. Yes. So you get an international perspective. We had a lot of American and Canadian clients as well. So you get a whole international experience. Plus you kind of get to see a different environment as well. It's lovely. Yeah. So it's good.
And sit on the beach at the weekend as well.
And sit on the beach when there's no hurricanes coming through, which there were fairly regularly. Yeah.
Brilliant. So before we wrap up today, is there anything you want to share around what's on the horizon for OSB? Any particular scoops you want to share today?
No, I think it's been a really kind of for me personally interesting 6 months. I think for me, I think we've worked really well with our intermediaries over the last 6 months or so, and I think that's really what we want to be doing. I think none of us can kind of second guess what's happening from a macro perspective. So trying to be consistent, trying to be open, trying to kind of maintain our kind of a relevancy of product range across the lending businesses. That's pretty much kind of what's going to continue. And in the background, try and invest in the digital experience that we've been kind of we've been touching on and through this conversation. We're doing a lot of work to focus on the kind of what happens to clients at the end of their maturity on mortgages, and again, obviously, make that kind of maturity experience as kind of appealing as possible in terms of attractiveness of product, but also ease of service and experience as well. Because I think that's a particularly critical part of the business, is to make sure that it's not just about originating; it's actually about a kind of lifetime relationship with an intermediary and a borrower, and just trying to kind of smooth the pathways. I think we've got a pretty progressive approach across all of the lending brands, but there's a lot that we can do to kind of improve that experience as well. So that's been given a focus as well. So
good. Busy year ahead then.
Lots to do. Lots going on, and I'm very lucky to have so many different lending businesses with which to kind of work as well, which is great. So. Who can say? Maybe we sit down in a year's time, Mark, and do a review of what's happened in the last year.
Sounds a good idea to me.
It's probably completely different to what we predict now.
Cool. Well, thanks a lot for coming in today and sharing. It's been super interesting, and thanks to our audience for listening.